Hi friends, in this video I am going to solve the problems of May 2018 Inter First Year Commerce Public Examination question paper. First, let us see the question paper. First problem is from final accounts. This problem comes for 20 marks. In question, he gives one trial balance and some adjustments. So see the question. From the following trial balance, prepare final accounts of Sachin Company as on 31st December 2016. So what is the meaning of that? Sachin Company is one sole trading concern. They did their business from 1st January 2016 to 31st December 2016. Now, in that 1 year business, whether they got profit or loss, they want to know. Similarly, they want to know their financial position. So, at the end of the year, they want to prepare final accounts. Now, from this information, we are going to prepare final accounts of this concern. Final accounts contains three things: trading account, profit and loss account, and balance sheet. Here in trading account and P&L account, both we prepare in same table. So first we are going to prepare trading account, after that profit and loss account. Now remember, these two accounts are nominal accounts. So what is nominal account rule? Debit all expenses and losses, credit all incomes and gains. Therefore, debit side we are going to write expenses and losses. Similarly, credit side incomes and gains. Then this is trading account and continuation is profit and loss account. In profit and loss account also same. Debit side expenses, losses, credit side incomes and gains. Then you will get a doubt. Then debit side expenses means which expenses come in trading and which expenditure in P&L. So remember, direct expenses and direct incomes we should show in trading account. And indirect expenses, indirect incomes come in P&L account. Then what is meant by direct expenditure? The expenses which are incurred by the firm till manufacturing process, they come under direct expenditure. And after manufacturing, if any expenditure is incurred by the firm, for example, sales expenses, otherwise financial expenses, administration expenses, they come under indirect expenses. Similarly, direct income is only one, sales, and all other incomes like interest received, commission received, discount received, they come under indirect incomes. Okay, then next point is, in question, we have trial balance and some adjustments now. Remember, trial balance amounts only for one time we have to write. So some amounts we record in trading account, some in P&L account, and some transactions in balance sheet. Only one time we should write. And adjustment amounts, two times they come. One time in trading account, then second time in balance sheet, or one time we wrote in P&L, then second time in balance sheet. That is the difference between these two. Then, before going to start the problem, let us recollect the trial balance rules. In trial balance, debit side what we record? Expenses, losses, assets. And the credit side, opposite to this, incomes, gains, liabilities. These basic points we have to keep in mind. Now let us start the solution. So for trading and P&L account, observe the heading. Trading account, comma, profit and loss account of Sachin for the year ending 31st December 2016. Then since this is account, debit side and credit side, these two symbols you have to put. Then first trading account we are going to prepare. Trading account we have to start with opening stock, where it is given in trial balance, opening stock. Opening stock means what? Last year closing stock becomes opening stock for the current year. So that opening stock we have to take in debit side. Debit side whatever you record, start with 2. 2 opening stock. Amount is 2,500 rupees. Then see the adjustments once. Outstanding salaries. So related to salary, there is one adjustment, no? For salary, put a tick mark like this. Okay. Then you can remember that for salary there is one adjustment. Similarly, closing stock. Okay. Prepaid insurance. So relating to insurance, there is one adjustment. Outstanding wages. For wages, put a tick mark. Then depreciation on machinery. Related to machinery, there is one adjustment. Yeah. Now, next item is purchases. Why purchase comes under direct expenses? Firm purchase the raw material, then they manufacture it. Means purchase expenditure is till manufacturing process, no? It comes under direct expenses. So debit side, 2 purchases. Purchase amount is how much? 5,000 rupees. And while writing the amount, you have to observe whether purchase returns are given. In trial balance, where he gives purchase returns, credit side. So purchase returns, yeah, purchase returns 500 is given. No? Since purchase returns are there, don't write the purchases in outer column. In inner column, write down the amount 5,000 rupees. And purchase returns, what to do? We have to deduct minus purchase returns 500. Then the remaining amount in outer column. Next, let us see one by one. Cash is an asset. It goes in balance sheet. Now we are preparing trading account now, so ignore it. Purchases completed. Wages. Wages is a direct expenditure. Why? To whom firm pays wages? To labor. Where they work? In factory. What they do? They manufacture goods. So wages expenditure is related to manufacturing process. It is a direct expenditure. Trading account, debit side. 2 wages. Since there is an adjustment, write down the wage amount in inner column. 1,000 rupees. And what is the adjustment? Outstanding wages 300. What is the meaning of that? For 2016 year, total wage expenditure is 1300 rupees. Out of this amount, firm paid 1000 rupees and firm has to pay 300 rupees. So why we are preparing this trading account? To know the profit or loss. If you want to know the profit or loss, not only the paid expenditure, payable expenses also we should consider. Therefore, to wages, these outstanding wages we have to add. Then total 1300 in outer column. Next, opening stock completed. Salary is an indirect expenditure. Ignore it. Insurance, carriage inward. Regarding carriage, remember some points. Carriage means what? Transportation of goods. So, this is firm. Sometimes what we do? We purchase the goods and from supplier's place to our place, we bring those goods and we pay that transportation expenditure. This is known as carriages or carriage on purchases, or goods are coming now, therefore carriage inwards. These three are same. We bring the goods, then we manufacture the goods. Means what? This expenditure is till manufacturing process we are spending that. Therefore, it comes under direct expenditure. Sometimes, after manufacturing the product, we may deliver the product to customer. So, firm is giving free home delivery facility to customer. Here also, firm pays carriage expenditure, but it is after manufacturing, no? So this carriage is called carriage on sales, or since goods are going out, if any of these three is given, it comes under direct expenditure. Take it in trading account debit side. Carriage on sales or carriage outwards. If this is given, this is indirect expenditure. Write in P&L account debit side. Now, they have given carriage inwards. Means what? We bought the goods and we are bringing them to our firm. So this is before manufacturing expenditure now. Since it is direct expenditure, debiting trading account. To carriage inwards. Amount is 500 rupees. Then furniture is an asset. Balance sheet item. Ignore. Sales returns. Credit side, from sales we have to deduct. So purchases we are writing in debit side now. Similarly, sales come in credit side. Credit side, when you are writing any account name, you have to start with by sales. Sales means income. Incomes where he gives in trial balance. Credit side no. Sales income is how much? 9,000 rupees. Since returns are there, write down this 9,000 rupees in inner column. Minus sales returns. Sales returns will be given in the debit side, debit column. 600 rupees. Now the remaining amount in outer column. Next, sales returns completed. Rent, P&L account item. Machinery, balance sheet. Debtors, asset, balance sheet. Discount, P&L account item. Bills receivable, bank overdraft. Sales completed. Purchase returns completed. These three also, they don't come in trading account. Now from adjustment also we should take one amount. What is that? Opening stock we have taken in debit side, no? Similarly, closing stock we should write in credit side of trading account. Closing stock means what? Current year unsold stock. Credit side by closing stock. Amount is 4,500 rupees. Then we have taken all direct expenses and direct incomes. Now what we should do is observe which side total is more. So credit side total is more. In rough notes, calculate the credit total minus debit total. Okay, then find out the difference. 4,100 rupees. So what is the meaning of this answer? Credit side we wrote incomes. Debit indicates expenses. Income is more than the expenditure. Then the difference is called profit. This profit is known as gross profit. Which side we should write that? Which side total is less? Since debit side we have less total, write down the amount in debit side. For answer, write down gross profit. Suppose debit side total is more, then the difference comes in credit side, no? Then you have to write by gross loss. Now amount, highest amount we should write two sides. Okay. So trading account is completed. Now the continuation is profit and loss account. In the same table we are going to continue that. First gross profit you have to bring in opposite side. By gross profit. If gross loss comes, then you have to bring that in debit side. Now profit and loss account. As I said, debit side indirect expenses we should write, credit side indirect incomes. So salaries. Salary to whom we pay? To employees. Where they work? In office, not in factory. So office related expenditure comes under indirect expenditure. So salary you have to debit. Related to salary, there is one adjustment, that is outstanding salaries. So for current year, total salary is 1,000 plus 500, 1,500 we have to pay. But how much salary we paid? 1,000. More how much we have to pay? 500. To know the correct profit or loss, not only the paid salary, outstanding salary also we should consider. Therefore, salary 1,000, write down in inner column, plus outstanding salary 500 rupees, in outer column 1,500 rupees. Then insurance. Insurance means what? Since we are running a business, to safeguard our goods from risks like fire accident, theft, etc., we may take one insurance policy. So when firm takes insurance policy, firm has to pay premium to insurance company. So whenever insurance word is given to us, then the meaning is firm paid insurance premium to insurance company. since it is an expenditure and there is no relation with the manufacturing process, insurance premium comes under administration expenditure. Therefore, indirect expenditure, P&L account debit side we should write. And related to this, there is one adjustment. Prepaid insurance 400. Then what is the meaning of that? In present year, insurance expenditure is given as 900. In current year, we pay 900 rupees. But in this 900, prepaid insurance 400. 400 belongs to next year. Pre means what? Before. So before only we paid. Means next year we have to pay, but that 400 also we paid in current year only. So current year expenditure is how much? 500 only, no? We want to know current year profit or loss. So show only current year expenses and current year incomes in these two accounts. Next year expenditure we record in next year. Therefore, this 400 what we should do? We have to deduct. So remember, if outstanding expenditure is given, we should add it, and prepaid expenses we have to deduct. Since adjustment is given, write down the insurance amount in inner column. Insurance 900 rupees minus prepaid. So current year expenditure 500 rupees in outer column. Then carriage inwards completed. Furniture, sales, rent. So only rent word is given. Rent received or rent paid. There is no proper information. In that case, you have to recollect trial balance rules. As I said, debit side we record expenses, losses and assets. Credit side incomes, gains and liabilities. Then observe rent amount which column he is giving. Debit column he is giving. Means what? It is one expenditure. Rent. Write down in profit and loss account debit side. Regarding rent, there is no adjustment. Therefore, write down the amount in outer column. Machinery, debtors, discount. Discount is of two types. Discount allowed, discount received. Now there is no proper information, no? In that case, you have to observe in which column he is giving the amount. He gave the amount in debit column. So debit column, we may have expenses, losses or assets, no? So discounter, since it is given in debit side, then the meaning is it is discount allowed, loss. So show in P&L account debit side. ₹400. Then bills receivable is an asset. Bank overdraft liability, sales, purchase return, capital, commission received. Since received word is given, this is an income to us. Observe, amount is given credit column, no? So this is indirect income. In profit and loss account, credit side we should show that. Commission received account. There is no adjustment. Creditors is a liability. Now trial balance amounts completed. Even adjustments also once you should observe whether we have taken all amounts or not. Outstanding salary is completed. Closing stock in trading credit side. Insurance over. Outstanding wages over. Now this is not yet completed. Depreciation on machinery. So machinery is a fixed asset. when we use fixed asset continuously, then its value decreases. So that is a loss. That loss comes under depreciation. It should be debited to profit and loss account. So, to depreciation on machinery. Since amount is not given, we have to calculate it. Machinery value is 5,000 rupees. 5,000 into percentage is given now 10 by 100. 500 rupees in outer column. So trial balance amounts and adjustments amounts we have taken. Now finally we have to calculate the net profit or net loss. So observe which side total is more. Credit side total is more. In rough notes you have to calculate the credit side total first. Total is minus debit total. Ten, 18, 22, 27, 2, 3. Okay. Find out the difference. This 1600 is profit or loss. Credit side we wrote incomes. Debit side expenses. Income is more than the expenditure. Therefore, the answer is profit. This profit is known as net profit. Which side we should write? Which side total is less? So, write down the answer in debit side. For this, what to write? To net profit. Then two sides, draw the lines and write down the credit side total. Okay. So this is trading account and profit and loss account. Close the table. Now the last statement is what? Balance sheet. This is balance sheet heading. Balance sheet of Sachin as on 31st December 2016. One should recollect previous accounts. For trading account and P&L account, we wrote for the year ended. But for balance sheet, we have to write as on. Why? Because on a particular date, we prepare balance sheet. Then, this is not an account. That is why I have not written DR, CR symbols. So don't call this side as debit side or credit side. Liability side and asset side. These words only we should use. Now let us see the trial balance again. Cash is an asset. So write down in asset side. Purchases, wages, opening stock, salaries, insurance, carriage, furniture. Furniture is an asset. And regarding furniture, there is no adjustment. Therefore, write down directly. Sales returns. Machinery is an asset. Since there is an adjustment, depreciation, write down the machinery value in inner column. 5,000 rupees. And depreciation where we calculated? In profit and loss account debit side. Depreciation was 500 rupees, no? So deduct that depreciation. So year starting, we had 5,000 worth of machine. In year we used it. So 500 value is reduced, and at the end of the year, value of the asset is 4,500. Write down that. The next, debtors. Debtors means who? A person who is liable to the firm. Since we have to receive money from him, it is an asset to us. So write down in asset side. Then discount. Bills receivables is an asset. Bills receivables means what? We sold goods to customers on credit. So we wrote a bill on him, a written proof, and we got his acceptance. Now this is bills receivable to us, because on this document in future we are going to receive some amount. Since money is going to come, it is an asset. Write down in asset side. Bills receivable 1,000 rupees. Next, bank overdraft. Bank overdraft means from bank we have taken loan. Since it is a liability, show that in liability side. Once you observe one point, I am not starting here with 2 or asset side with buy, because this is not an account. Only for trading and P&L we should do like that. Capital is liability, it comes at the end. Creditors. Creditor means who? The supplier who has sold goods to us on credit. So we have to pay money to him, no? It comes under liability. Creditors 1,000 rupees. Then trial balance amounts are completed. From adjustments also we should take some values. Outstanding salary. What I said, adjustment amounts 2 times. Outstanding salary 1 time, where we have taken profit and loss account. We added to salary. Now second time we have to pay salary, means it is a liability to us. So write down in liability side. Outstanding salary 500, liability. Then closing stock is an asset, but at the end we will take it. Prepaid insurance. Next year we have to pay insurance premium. We paid in current year only. So this is an asset to us. Why? Because without receiving the benefit, we paid some amount to other party. In future, we are going to receive some benefit from insurance company, no? Since we have to receive some benefit, it is an asset to us. So remember, outstanding expenditure is a liability and prepaid expenditure is an asset. ₹400. Outstanding wages. We have to pay wage. Liability, no? Depreciation on machinery. We have completed that. Now asset side, what is left? Closing stock. Write down at the end. ₹4,500. Now liability side, capital. Capital you have to write in inner column. Amount is 15,000 rupees. To this, in profit and loss account, we got net profit, no? That net profit we have to add. If you get net loss, you have to deduct from capital. So, add net profit 1600 rupees. Add both. Write down in outer column. Now two side totals we have to do. Liability side total is 19,400. Asset side also we should get the same total. So balance sheet is tallied. Then your problem is correct. Okay. This is your balance sheet. This is final accounts. It is for 20 marks. Now next problem is triple column cash book. Prepare 3-column cash book from the following particulars. So in question, he has given some transactions. With the help of these transactions, we have to prepare triple column cash book like this. This is triple column cash book format. Here, this is called center line. Then left side portion is called debit to indicate that we have to write DR. And right side portion is called credit, for that write down CR. Now, starting 1st March 2016, cash in hand 10,000 rupees. This is not a transaction. This is known as opening balance. So opening cash balance is an asset. Asset always shows a debit balance. Therefore, debit side we should write this. Debit side in date column, write down the date. With the 2 we have to start because this is an account. 2. What to write for opening balance? Balance brought down. Amount is 10,000 rupees in cash column. Now, next, date is not given. Then the meaning is same date. Cash at bank means what? On that particular date, in our bank account, how much bank balance we have? 5,000 rupees. So this is also considered as an asset. Asset shows a debit balance. Therefore, debit side in bank column, we have to write that bank balance. Okay. Then, these two are opening balances. Since both are assets, we are writing in debit side. Then remaining are transactions. For transactions, there are some journal entries. So frame the journal entry and post the journal entry in triple column cash book. So before going to start the problem, remember one point. In triple column cash book, simultaneously we are preparing two accounts, cash account and bank account. Discount column also we open, but this discount is not an account. So whenever cash is coming, sometimes we allow discount, or when we receive a check, we allow some discount to debtor. Then that discount particulars along with the cash or check details we record in debit side. Similarly, when we pay cash or when we issue a check to our supplier, they may give discount to us. So it is convenient to record discount received transactions along with cash or bank transactions. That is why we are showing discounts along with cash and bank columns. but discount columns are not accounts. That is why these discount columns are known as memorandum columns. Again, in ledger, we open a discount account separately. Then, see the first transaction, cash sales. For this journal entry, first we have to frame. So to frame the journal entry, you should know the types of accounts. Account is divided into three types: personal account, real account, nominal account. Then if any account is opened with a person name or firm name, that account is known as personal account. For example, Rama account, Andhra Bank account, etc. If any account is opened with one asset name, then that account comes under real account. Suppose missionary account, building account, etc. Then if any account is opened with one expenditure name, loss name, or income name, or gain name, profit name, then that account comes under nominal account. For example, salary account, commission received account, depreciation account, etc. Now for these three accounts, there are three accounting rules. For personal account, what is the rule? Debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. For nominal account, debit all expenses and losses, credit all incomes and gains. So with this information, for every transaction, we have to frame one journal entry. Then that journal entry we have to post in cash book. See the transaction. Cash sales means what? This is firm. Always you remember, while preparing triple column cash book, we have to assume that we are an accountant of a firm. Means think the transactions from firm's point of view. To the firm what is coming, or from the firm what is going. Like that you have to analyze. So we are running a firm, and what we sold, no information is given. When no information is given, then the meaning is we are selling goods. So what are going from us? Goods. And clearly he stated that it is cash sale. Then customer is paying cash to us. This is a transaction. Goods are going, cash is coming. Now, in this financial business transaction, there are minimum two accounts. Those two accounts first we have to identify. So, what is coming to us? Cash. Therefore, cash account is one account. And what are going from us? Goods. Then, goods account is another account. Then, cash is an asset. All assets come under which account? Real account. So, cash account is a real account. Then, goods also an asset. So, goods account also a real account. Then, apply real account double entry principle. Debit what comes in, credit what goes out. So see the diagram. What is coming to us? Cash. Therefore, debit what comes in is applicable for cash account. So according to that rule, cash account we have to debit. And goods also real account. So what is real account rule? Debit what comes in, credit what goes out. Since goods are going from the firm, we have to credit goods. Then remember one point, when goods account comes in credit, then instead of goods we have to write sales. Why like that? Because if you write a goods account what as it is, it leads to so many confusions. Why? Because in 4 situations goods account comes. In case of purchases, in case of sales, purchase returns, sales returns. So if you write goods, then the problem is in goods account all these 4 transactions we have to post. So it leads to a lot of confusions. That is why, since this is sales transaction, When goods are in credit side, instead of goods, write down sales. Then what is the final entry? Cash account debtor to sales account. Final entry is cash account debtor to sales account. Now, this journal entry we have to post in the account. How to post? Observe cash account and sales account. Out of these two, which account we are preparing in this triple column cash book? See the columns. Cash column we open. Means what? Cash account we are preparing. We are not preparing sales account in this table. We prepare sales account in another book, that is ledger. So, since cash is in debit, we have to post this entry in debit side of this account. So, debit side, in date column, write down the transaction date, 6th. 2. What to write? Other side account name you have to write. So, what is the other side account name? Sales account. Since in cash account we are posting, we have to write the amount in cash column, 3,500 rupees. Then, next transaction is purchases. So, what we purchased, no information is given. Then the meaning is we are buying goods. So, from supplier, what are coming to us? Goods. And since the supplier name is not given, this is cash purchase. So, in return, what we pay to supplier? Cash. Then two accounts we have to identify. Goods are coming. So, goods account is one account and cash is going. Therefore, cash account is another account. Both are assets. So, both come under real accounts. What is real account principle? Debit what comes in, credit what goes out. So, what is coming to us? Good. Therefore, debit it. Since cash is going from us, credit cash account. Then when goods come in debit, instead of goods we have to write purchases. Then what is the final entry? Purchases account debtor to cash account. Now, which account we are preparing? Cash account. Cash is in credit. Therefore, this entry, credit side we have to post. So, credit side, in date column, write down the date. Debit side, we have to start with 2. Similarly, credit side, start with buy. What to write? Other side account name we have to write. That is purchases. Buy purchases account. Okay. Since we are posting in cash column, cash account, write down the amount in cash column. Purchase amount is 6,000 rupees. Then, next transaction is cash paid to Venkatesh 2,950, discount received 50 rupees. So, what is the meaning of this? Firm has to pay 3,000 rupees cash to Venkatesh. Since we are paying the amount on time, Venkatesh is giving 50 rupees discount to us. So, what happened in this transaction? Observe. We are paying cash to Venkatesh. From the firm, cash is going to Venkatesh. And discount received is also given in the question. Now, whenever discount transaction is given, in entry, 3 accounts come. So, what are the accounts here? To whom you are paying money? To Venkatesh. Therefore, Venkatesh account is one account. What is going from us? cash. Then cash account is second account. And since discount received is there, take that account also. Now Venkatesh, person name, no? All person names are known as person names come under personal accounts. Then cash, asset, so real account. Discount received is a gain, so it comes under nominal account. Then apply the rules. Personal account, debit the receiver, credit the giver. Here Venkatesh is receiving cash, so Venkatesh is a receiver. Debit him. Real account rule, debit what comes in, credit what goes out. Now cash is going from the firm, then credit it. Nominal account rule, debit all expenses, losses, credit all incomes and gains. Discount received is a gain to us, therefore credit it. So final entry will be Venkatesh account debtor to cash to discount received. Venkatesh account debtor to cash to discount received. Now cash account we are preparing. Cash is in credit. So say this entry credit side we should post. In date column write down the date 9th by what to write other side. Venkatesh is there, no? Venkatesh account. Since discount received amount is also there, in discount column write down the discount amount, and in cash column cash. Next, received cash from Virat and discount allowed. So meaning is from Virat how much money we should receive? 3,800 rupees. Since Virat paid that amount to us on time, firm is giving some discount to Virat. Okay. Then from Virat cash is coming to us and discount allowed is also given in the question. Now what are the three accounts? Cash is coming, therefore cash account is one account, and discount allowed loss is one account, and Virat account is another account. Then cash asset, it comes under real account. Discount allowed loss, it is a nominal account. Virat account, person name, no, it is a personal account. Real account rule, debit what comes in, credit what goes out. So cash is coming, therefore debit cash account. Nominal account rule, debit all expenses, losses, credit all incomes and gains. Now discount allowed is a loss, therefore debit it. Personal account rule, debit the receiver, credit the giver. Now Virat is giving cash to us now, he is a giver, therefore credit him. Then final entry, cash account debtor, discount allowed account debtor to Virat account. To Virat account, this is the entry. Now cash account we are preparing. Cash is in debit, so debit side we have to post. What to write? Other account, Virat account. 12th date. In discount column 100 rupees. In cash column 3,700. Okay. Then cash withdrawn from bank for office use. Whenever we deposit money in the bank or when we withdraw money from bank for office use, these two come under contra entries. So the peculiarity of contra entry is other transactions only one time we are posting, either in debit side or credit side. But contra entry, two sides we have to post. Okay? Cash withdrawn from bank for office use. So what happened here? Firm is maintaining one bank account. So for office purpose, we withdrew money from bank. So cash is coming into the firm. Two accounts we have to pick up now. Since cash is coming to us, cash account is one account. And from bank we are taking that cash now. So bank account is another account. Cash is an asset, so it comes under real account. And don't think that bank is also a real account. Generally what student thinks? Bank means bank balance, asset. So he assumes it as real account. But bank account when we open, then the meaning is a particular bank name we write there. When you really work in any organization, that bank name you are going to write here. For example, SBI account. So it is a firm name. Firm names come under personal account. So bank account is not a real account. It is a personal account. Then apply the double entry rules. Real account, debit what comes in, credit what goes out. Now cash is coming to us, therefore debit it. Then personal account rule, debit the receiver, credit the giver. Bank is giving money to us now. Bank is a giver, so credit it. Now final entry is cash account debtor to bank account. Then this entry is known as contra entry because cash account we are maintaining and even bank account also we are preparing in the same table and both are in opposite side. So 2 times we have to write this entry. Let us record in cash account first. Since cash account is in debit side we have to post this entry. Date is 18. What to write? Other side account name, that is bank account. To bank account. In which column? We are posting in cash account, no. Therefore write down the amount in cash column. Amount is 800 rupees. Similarly, in bank account also we post. Bank is in credit. Therefore credit side we have to post. What to write? Other account name, cash account. 18th date by cash account. Since we are recording this in bank account, write down the amount in bank column. Then, since this is contra entry, to indicate that in LF number column, write down contra C. C stands for contra. Then, while writing contra entry, remember one point. When we write bank, amount comes in cash column. Similarly, when we write cash account in particulars column, amount comes in bank column. So, writing cash and showing the amount in cash column is wrong. Similarly, when you write bank word here, don't record the amount in bank column. You remember like this. Then, Last one is paid salaries by check. So what happened here? Firm paid salaries to employee. Instead of giving cash, we issued a check to employee. What he does with that check? He goes to bank where we are maintaining account. He submits the check and from bank he takes cash. Now, two accounts we have to pick up now. First one, what is the expenditure name? Salary. Therefore, salary account is one account. And other account is not cash account because cash is not coming into the firm or cash is not going from the firm. Since bank is giving cash, bank account is the another account. Okay. Then salary, expenditure. So all expenses come under nominal account. Don't think from employee's point of view. To employee, salary is an income. No, you are not an accountant of employee. So think from firm's point of view. To the firm, salary is an expenditure. Therefore, nominal account. Bank is a personal account. Since salary is an expenditure, according to nominal account, we have to debit salary account. And personal account rule, debit the receiver, credit the giver. Bank is giving money to employee, no. Bank is a giver. Therefore, we should credit bank. Then final entry is salary account debtor to bank account. Now, bank account we are preparing here and bank is in credit. So we have to post this entry in credit side of this account. Credit side 28 by, what is the other account name? Salary. Amount in which column? Since we are recording in bank account, write down the amount in bank column. So till now, what we did? We have completed posting work. So to do this posting work, we use journal entries now. There is other method also. Suppose you are not perfect in journal entries, even though you want to do triple column cash book. Then by using some shortcuts also, we can prepare triple column cash book. Now that shortcut method I am going to explain. So listen carefully. Cash in hand, cash at bank. Both are opening balances, no? For opening balances, there are no shortcuts. So since these two are assets, write down in debit side. Same point. Then, remaining things are what? Transactions. For transactions, remember one rule. That is, debit side and credit side. We have two cash columns, no? So when cash is coming into the firm, it comes in debit side cash column. If cash is going from the firm, the transaction comes in credit side of this account. Credit side cash column, we have to write that. Similarly, two sides we have bank columns now. Because of a transaction, if our bank balance is increasing, it comes in debit side bank column. So because of a transaction, if bank balance decreases, it comes in credit side bank column. If you remember these points, then all these transactions properly we can post. Let us analyze in that method. Cash sales. I am firm. What I did, I sold goods to customer. So from the firm, goods are going. And since it is cash sale, cash is coming. Cash is coming. So which side cash column? Debit side cash column. See, 3,500 to sales. Similarly, purchases. What happened here? Firm purchased goods. Goods are coming, cash is going. Cash is going. So which side? Credit side, cash column. 6,000. Since this is purchase transaction, write down purchases. Then cash paid to Venkatesh, discount received. So firm paid cash to Venkatesh. Cash is going. Therefore, credit side cash column. Since discount is also given in the question, write down the discount amount here. To whom we paid, write down that person name. Next, received cash from Virat, discount allowed. So firm received cash from Virat. Cash is coming. The which side? Debit side. Discount column, discount amount. From whom we are receiving that amount, write down that person name in particulars column. Then contra entry. Cash withdrawn from bank for office use. How to write the contra entry? By using shortcut method. Let us observe. I am firm. What I did? From bank, I withdrew money for office use. So cash is coming. So we said cash column. Debit side, cash column. Write down the amount first. Then from bank, when I withdraw cash, what happens to my bank balance? Decreases. Therefore, we said bank column. Credit side, bank column. So first amounts you have to record. Then we know one point. When amount comes in cash column, we should not write cash word here. Therefore write down to bank. Similarly, we wrote the amount in bank column. No, we should not write bank. So write down cash. Since this is contra entry, to indicate that in LF number column, write down C. Okay. Then paid salary by check. So firm issued a check to one employee for salary. Then what employee does? He goes to our bank. From our account, he withdraws the money. So what happened to bank balance? Decreased. So we said bank column, credit side bank column. Write down the expenditure name. So I am not using any entries here. By using shortcut method also, we can post the transactions like this. So which one is convenient to you? You follow that method. Shortcut method or journal entries method. Now posting is completed. Then next step is balancing. First what to do? Leave some space and draw the lines for amount columns. Credit side also just opposite to debit, draw the lines. Okay. Now discount columns are memorandum columns. Therefore, write down the total directly. Now cash and bank, these two are accounts. So we have to calculate the balance. Cash, first debit side, total we have to calculate. Debit side total is minus credit side. Then find out the difference. Yeah. So which side total is less? Credit side total is less. So credit side, this amount we should write. For this, what should be the date? Last date of the month. March month last date, 31st. If you don't know in which month how many days are there, then apply this method. With the left hand you have to start January, February, March, April, May, June, July, August, September, October, November, December. So if upper portion is coming 31 days, lower portion 30 days, then which month is exempted from this rule? February. Okay. So January, February, March. Since upper portion is coming, last date is 31st. Then for answer, you have to write by balance carried down. Then two sides, write down the debit side total. And always should remember, for a cash column, debit total should be more than credit total. Then only your problem is correct. Why like that? Because debit side we are writing receipts, credit side payments. So payment cannot exceed receipt, no? How much we receive, from that only we pay. Therefore payments may be equivalent to receipts or less than receipts. It cannot be more than receipts. That is the reason. Then for bank column also do the same. So which side total is more? Debit side. Debit side total is 5,000. 5,000 minus 1,800. 3,200. Which side total is less? That side you have to write the amount. Credit side total is less. 3,200 here. Then again you need not to write this. Already we wrote for cash column. Then total will be 5,000. So for March month we have completed. When you work in organization, every month you have to prepare triple column cash book like this. So since you are a student, you need not to prepare for April. Simply bring the balance to next month and leave the problem. Then date will be below this total you have to write. Date is next immediate date of this. If today is 31st March, then tomorrow's date will be 1st April. What to write? From here we are bringing the balance now. Therefore write down balance brought down. In cash column, cash balance. In bank column, bank balance. Okay. So this is triple column cash book. This is BRS problem, bank reconciliation statement. This problem comes for 10 marks. Now, question is, from the following information, prepare a BRS of Shiva Traders as on 31st December 2016. And he has given some information. All these points are what? The reasons for disagreement between bank balance as per cash book and passbook. There are some differences. For these differences, these are the reasons. Now, which book balance is given in the question? Bank balance as per passbook 15,000. So with that we have to start the problem. So this is the format of BRS, particulars, amount. This is called inner column and this is called outer column. Now in particulars column, we have to start with the bank balance given by him. Sometimes he gives bank balance as per cash book. Sometimes as per passbook. In present problem, he has given the balance as per passbook. And the bank balance is of two types. Favorable bank balance and overdraft bank balance. Favorable bank balance means what? Firm has some bank balance in the account. We have some amount in the account. That is called favorable bank balance. Unfavorable or overdraft bank balance means what? Firm has taken some loan from the bank. If it is overdraft balance, then clearly he will mention that in the question. And here there is no information like that. Therefore, our assumption is this bank balance is favorable bank balance. So I wrote favorable bank balance as per passbook. Then all these reasons are there, no? Some reasons we should add to this passbook balance and some reasons we should deduct. Then the answer is what? Bank balance as per cash book. Okay. So to add or subtract the reasons, we have to do some analysis. For that, keep some points in mind. Firm prepares cash book and the bank prepares passbook. So between firm and bank, whenever there is any transaction, then the transaction will be entered by firm in cash book, entered by bank in passbook. And because of a bank transaction, if firm bank balance is increasing, then in cash book it comes in debit side. Remember. And same thing comes in credit side of passbook. And because of a transaction, if bank balance is decreasing, then in cash book it will be credited and in passbook it will be debited. If you know these 4 points, then we can easily do the BRS. Now let us see the first reason for disagreement. That is, check deposited in bank but not yet collected 2000 rupees. Always should remember, BRS is prepared by firm, not by the bank. Therefore, analyze the transactions from firm's point of view. So what we did, I am firm. Start like that. What I did, check deposited in bank but not collected. Means I received checks from somebody. Actually what I should do, I should go to that person's bank and I should encash it. But I am a businessman. I cannot go to all those banks like that. So I am also maintaining a bank account now. Then if anybody gives a check to me, instead of going to their bank, what I do, I deposit this check in my bank. Then what I think, my bank collected the money from their bank account and it is deposited in my account. So my bank balance is increased. Now firm maintains cash book, no. So in cash book we said I recorded the transaction debit side. Amount is 2000 rupees. I thought that my bank balance is increased. But what happened? But not collected. Means what? Bank has not yet collected that check money. So anything is credited in bank? No. There is a difference. Amount is debited in cash book but not credited in passbook. That is why on a particular date, the bank balance as per cash book and passbook both are not same. Now, what we should do here? Observe which book balance is given to us. Passbook balance is given. Then the rule is passbook should be adjusted according to cash book. Means what? In cash book, if bank balance is increasing, we should increase in passbook. In cash book, if bank balance is decreasing, we should decrease in passbook. Now what happened in cash book? Bank balance is increased. So in passbook, we should also increase the bank balance. Increase means which side? Credit side, no? So credit side 2000. If you increase, then both will be the same. Now this is my answer. My answer is what? 2000 we should increase. Now remember one point. If answer comes as increase, we have to add it. If answer is decrease, we have to subtract it. Now, since it is add, here first point, checks deposited but not collected. Amount is 2000 rupees. Since it is added, in outer column you have to write the amount. Okay. Then next one. C point. Check issued but not presented for payment 1600. Issuing means what? Giving to somebody. So firm has to give money to somebody. Then instead of giving cash, what firm did? Firm issued a check. Then what we think? That person went to bank, from our account he took the money. So bank balance decreased. With us which book is there? Cash book. So bank balance decrease means which side we record in cash book? Credit side. We decreased 1600 rupees in our cash book. Suppose that person went to bank. He presented the check. He took the money from our account. Then only bank people will debit in passbook. But what happens? See? But not presented for payment. So that person didn't go to bank. Then according to passbook, bank balance is not decreased. This is the difference. Now which book balance is given to us? Passbook. So what is the rule? Passbook should be adjusted according to cash book. What happened according to cash book? Bank balance is decreased. So we should also decrease. Means which side? Debit side. Our answer is decrease. Decrease means what to do? Minus. So here write down. First point, checks issued but not presented for payment. Amount is 1600. Since we want to deduct this amount, write down the amount in inner column. Okay. Then next one. Bank paid insurance premium 500 rupees. See, I am running a firm. So bank acts as an agent of me. So sometimes firm gives some standing instructions to bank. Whatever amounts we have to pay from our account time to time, you only pay them. So bank paid insurance premium from our account. Who knows about this? Bank people. Means in which book it was entered? Passbook. So after paying that amount, what happens to bank balance? Decreases. Means in passbook which side they entered? Debit side. Amount is 500 rupees. According to passbook, bank balance is decreased. But we don't know about that. So when they debited, we have to credit that amount now. But always you remember one point. If any reason is given here, then the meaning is it is recorded in one book, not recorded in another book. Otherwise, it is properly recorded in one book and wrongly entered in another book. Always that is our assumption. So, it is recorded in passbook means what? Not recorded in cash book. You need not to mention that clearly. We have to understand. In cash book, 500 is not credited. Now this is the difference. Then which book balance is given to us? Passbook. Therefore, passbook should be adjusted according to cash book. What happened to cash book? There is no increase, there is no decrease. Bank balance according to cash book is constant. But what we did here, unnecessarily we have decreased 500 rupees. Now how to make equal this passbook balance with cash book balance? Whatever we decreased here, again if you increase, then both will get nullified, and final result is according to passbook bank balance is constant. So the answer is 500 we have to increase in passbook. Increase means which side we should write? Credit side. 500 we should increase. This is our answer now. Answer is increase. Means we have to add. Second point, what to write? Insurance premium paid by bank. Insurance premium debited in passbook only. Okay. Amount is 500. Since we are adding, write down the amount in outer column. Now, next reason is the debtor paid directly into bank account 1800. Debtor means who? Who is liable to the firm. So debtor has to pay 1800 rupees to us. He knows our bank account number. Then he is near to bank premises. Then what he did? Directly he went to bank and he deposited in our account. So first who knows about this? Bank. And after this transaction, what happens to bank balance? Increases. Means in passbook, we said they recorded this transaction, credit side. But we don't know about this. Therefore, according to cash book, nothing was debited. So I told no, in one book we entered means, obviously the meaning is, in another book it was not entered. Now this is the difference. Which book balance is given to us? Passbook. Therefore, what is the rule? Passbook should be adjusted according to cash book. According to cash book, how is the bank balance? Constant. There is no increase, no decrease. But in passbook, unnecessarily we increased 1800. Now what to do? If you cancel this, then according to passbook also balance will be constant. How to cancel that 1800? By decreasing. So decrease means which side? Debit side. Decrease 1800 rupees. Now this is our answer. So decrease means we have to subtract. What to write? Amount directly paid by the customer into bank account. Since we are subtracting, amount should be in inner column. Okay. So all reasons we have written. Now finally what to do is, these three amounts you have to add. $17,500. Then From this amount, deduct this. ₹14,100. So this amount is what? This is favorable bank balance as per passbook balance is given by him. Then we ascertained cash book balance. Therefore write down cash book. Suppose we got minus figure here. When you will get minus value? If this is less than this amount. If you get minus value, then don't write favorable bank balance. You have to write overdraft bank balance as per cash book. Clear? So this is BRS. It is for 10 marks. Next problem is ledger problem. It comes for 5 marks. See the question. Prepare Ramyashri account from the following particulars. And there are some transactions. So with these particulars, we have to prepare Ramyashri account. Then who is preparing this account? Firm. So Ramyashri is our supplier or customer. In the month of January, between Ramyashri and firm, there were some transactions. Finally, firm wants to know whether she has to pay money to us or we have to pay money to her. Means whether she is a debtor or creditor. To know about that, firm is preparing Ramyashri's accounting firm's books. Now, think the transactions from firm's point of view. Then, this is the ledger format. All accounts we have to prepare in ledger book. So, write down the heading ledger. Under that, account name is Ramyashri account. This account is divided into 2 parts. Left part is called debit. To indicate that DR symbol we have to write. This is a center line, and right part is called credit. Write down CR. Then each side we have date, particulars, journal folio number and amount columns. Now first one is what? Amount due from Ramyashri 8,000. What is the meaning of this? This is not a transaction. This is called opening balance. What is the meaning of this? In previous month also, we had some transactions with Ramyashri. And what is the end result of the transaction? Amount due from Ramyashri. So she has to pay 8,000 rupees to the firm. Now this opening balance we should take in the account. We said we should write. Further, follow some rules. If she is a debtor, write down that amount in debit side. Because debtor is an asset. Asset shows a debit balance. And if Ramyashri is a creditor, then creditor is a liability. Liability shows a credit balance. Therefore, take that amount in credit side. Now, observe the sentence. Amount due from Ramyashri. Means who has to pay to whom? Ramyashri has to pay to the firm. So, to the firm, she is a debtor. So, remember, if she has to pay the money to us, she is a debtor. And if we have to pay money to her, then she is a creditor. So debtor means who? A person who is liable to the firm. Creditor means a person to whom firm is liable. Now Ramyashri is liable to us, no. So she is a debtor. Means it is an asset. Asset shows a debit balance. So show that amount in debit side. Debit side, write down the date, start with 2. What to write for opening balance? Balance brought down. Amount is 8,000 rupees. Then remaining are not opening balances, remaining are known as transactions. How to record the transactions here? For each transaction, you have to frame one journal entry, and that journal entry you have to post in the account. So to frame the journal entries, you have to remember these points. Account is divided into 3 types: personal accounts, real accounts, and nominal accounts. Which accounts come under personal accounts? If any account is opened with the person name or firm name, that is personal account. If any account is opened with asset name, that is real account. And the expenses, losses, incomes, gains related accounts come under nominal account. For each account, there is a double entry principle. You have to by heart it. Now, see the 6th day transaction. Goods sold to Ramyashri. So what happened here? This is firm. Assume that you are an accountant of firm. So think from firm's point of view only. What we did? We sold goods to Ramyashri. When customer name is given, then the meaning is we are selling to her on credit. In credit transaction only, we remember customer's name. So what happened here? Cash is not coming to us. Only goods are going. Now, 2 accounts we have to identify. To whom we gave these goods? To Ramyashri. So Ramyashri account is one account. And what are going from us? Goods. Goods account is another account. So with any person name, if you open an account, that account comes under personal account. So Ramyashri account is a personal account. And the goods, asset, no? So asset comes under real account. Then what is personal account rule? Debit the receiver, credit the giver. Here Ramyashri is receiving goods, no? She is a receiver. So what to do? Debit her. Then real account rule. Debit what comes in, credit what goes out. Goods are going from us. Therefore, second line is applicable. Credit what goes out. Credit goods account. When goods come in credit, instead of goods, what to write? Sales. So what is the final entry? Ramyashri account data to sales account. Ramyashri account data to sales account. 2 accounts are there. And which account we are preparing at present? Ramyashri account. Therefore, observe which side Ramyashri account is there. Ramyashri account is debited. Therefore, this entry, debit side we have to post. So this is the center line and left side is called debit side. So left side in date column, write down the date, start with 2. What to write? Again, don't write Ramyashri. Other account name you have to write. That is sales account. Amount is 11,000 rupees. Next, 10th date. Goods returned by Ramyashri. Ramyashri purchased goods from us. Now she is not satisfied with the quality. Then she returned those goods to us. Goods are coming from Ramyashri. Now what are the 2 accounts? Goods are coming, so goods account and Ramyashri account. Real account, personal account. Real account rule. Debit what comes in, credit what goes out. Goods are coming now, therefore debit. Personal account rule. Debit the receiver, credit the giver. She is a giver, therefore credit. When goods come in debit, don't write purchases because this is not a purchase transaction. What it is? Think from firm's point of view. Once we sold to her, now she is returning these goods to us. Means this transaction comes under sales returns. Therefore, debit side, instead of goods, you have to write sales returns account. Then what is the final entry? Sales returns account debtor to Ramyashri account. We are preparing Ramyashri account. It is in credit. So you have to post in credit side. In date column, write down the date. Start with the buy. What to write? Other account name. Other account name is sales returns account. Sales returns account. Amount is 500 rupees. Next. Received cash from Ramyashri. From Ramyashri, we are receiving cash. What are the two accounts? Cash account, Ramyashri account. Asset no, real account, person, so personal account. Real account rule. Debit what comes in, credit what goes out. Cash is coming, so debit it. Personal account rule. Debit the receiver, credit the giver. Ramyashri is a giver, so credit her. Final entry, cash account debtor to Ramyashri account. Ramyashri account we are preparing. It is in credit, so post that entry in credit side. By what to write? Other account name. Cash account. Date is 16th. Amount 3000 rupees. Then last one. Received check from Ramyashri. So instead of cash, what is coming? Check is coming. Then what we do? Actually, we should go to Ramyashri's bank and we should present the check there. We should take money. But daily we receive so many checks like that. We cannot go to all those banks. We have to take care of our business. Then what we do? We also maintain one bank account now. So to that bank, we send this check. Then our banker collects the money from her bank and that money will be deposited in our account. Okay. So what are the two accounts here? Our bank is collecting the money now. Therefore, bank account is one account. And from whom we received that check? From Ramyashri. Therefore, Ramyashri account is another account. Bank means actually speaking, we write a bank name there. Andhra Bank account, like that. So it is a firm. With the firm names, if you open any account, it comes under personal account now. So bank account is a personal account. And Ramyashri is also a personal account. Personal account rule. Debit the receiver, credit the giver. Who is the receiver here? Bank is receiving money. So debit bank account. And who is giving that check? Ramyashri. Since she is a giver, credit her. Bank account debtor to Ramyashri account. Ramyashri is in credit, so credit side we have to post. What to write? Other side account name. Bank. 20 date. 6,000 rupees. Okay. In this manner, we have to post the transactions. Now, for posting, we use journal entries, no? Without using journal entries also, we can do this posting work. How? Let us see. Ramya Shri account we are preparing. Ramya Shri, person name, no? With any person name, if you open account, that account comes under personal account. So what is personal account rule? Debit the receiver, credit the giver. Meaning is, if Ramya Shri is receiving any amount, then that comes under debit side. If Ramya Shri is giving something, if she is a giver, then it comes in credit side. Remember this point. Now in that manner, let us see the problem again. But these shortcuts are not applicable to opening balance. For opening balance, apply those rules only. If she is a debtor, write in debit side. If she is a creditor, write in credit side. So these shortcuts you can apply for transactions only. Goods sold to Ramya Shri. I am firm. I sold goods to Ramya Shri. I am giving goods to Ramya Shri. So Ramya Shri is a receiver. Receiver means which side? Debit side, no? So see, debit side only this amount is coming to sales. Next one, goods returned by Ramya Shri. So Ramya Shri is returning goods to us. She is giving goods. She is a giver. Giver means which side? Credit side. See, since it is sales return, write down sales returns word here. Then received cash from Ramya Shri. Ramya Shri is giving cash to us. She is a giver. Therefore, credit side we have to write. Since she is giving cash, write down cash word. Then received check from Ramya Shri. She is giving check. She is a giver. Therefore, credit side you have to write. I am not using any entries here. In this manner also, you can post the transactions. Now, posting work is completed. Next work is balancing. How to do that? Observe which side total is more. Debit side total is more. So in rough notes, debit side total, first you have to find out. Minus credit side total. $9,500 is the balancing figure. This side we should write. This side total is less. So credit side total is less. Write down this amount in credit side. 9,500. Further, the date should be last date of the month. This is January, no? In January, what is the last date? 31st. For answer, what to write? By balance carried down. Then two sides, write down the debit side total. Since we wrote the difference amount, now all these amounts total is also 19,000 rupees. Then, since balance carried down is there, means account is not yet closed. So it will be continued to next month. Since you are a student, only for 1 month he asked, but in organization we continue like that throughout the year. Therefore, this balance carried down figure for next month you have to bring. Date should be next immediate date of this date. 2. What you have to write? You are bringing the balance, no? So balance brought down. Amount is 9,500. Okay. This is subsidiary books problem. It comes for 5 marks. See the question. Record the following transactions in purchase book. He is asking us to prepare purchase book. Now, purchase book format is this: date, particulars, ledger folio number, inward invoice number, amount. What is this inward invoice number? Observe. This is firm. So we purchased goods from one supplier. Then supplier is selling goods to us, no? Then who knows about goods details? Seller, supplier. So supplier prepares one document and he mentions the details of goods. Now this document is known as invoice. Since he is selling to us on credit, he prepares invoice. If it is cash sale, this document is known as bill. Now think from firm's point of view. We are receiving that invoice, no? So since invoice is coming to us, it is known as inward invoice number. And what we do on date basis, whatever invoice comes to us, we file them. We give a serial number to it and we preserve those invoices for future reference. Okay? Then see, all purchases we should not record in purchase book. So purchases are of two types. Goods we may buy, sometimes fixed asset we may buy. Goods means what? The article with which we do business. For example, take one stationery shop. What he is going to sell? Stationery items, no? So stationery items come under goods for a stationery shop holder. Similarly, fixed asset means what? If any asset is useful to run the business, that asset is called fixed asset. For example, in that same stationery shop, owner is using one chair. He is using one table. He is not going to sell them. They come under fixed assets. What are the examples for fixed assets? Building, furniture, machinery, land, vehicles, etc. Now, these goods we may buy for cash or on credit. Cash purchases means what? We buy goods, immediately we pay money. Then credit purchase means what? We buy goods but payment will be postponed. Similarly, fixed assets also we may buy for cash or on credit. So there are four types of purchases. Goods purchased for cash, one type. Goods purchased on credit. Fixed asset purchased on cash. Fixed asset purchased on credit. Total four types of purchases we have. Now these four we should not record in purchase book. You know, subsidiary books are total 8. Purchase book is one of them. So all purchase transactions we should not record in purchase book. Only one type, that is when goods are purchased on credit, it comes in purchase book. Then remaining purchases appear in other subsidiary books. For example, goods purchased for cash, it goes in cash book. Fixed asset purchased for cash, cash book. If fixed asset is purchased on credit, it appears in journal proper. Okay? Then, see, if nothing is mentioned regarding the article, then the meaning is firm purchased goods. Because regularly we buy goods and rarely we buy fixed asset. So if proper information is not given regarding the product which we are going to buy, then assume that we are buying goods. And for cash or credit, how to identify? If it is on credit basis, then compulsory he gives supplier's name. Because in credit transaction, we have to remember the supplier's name. We have to record his name in the books. Why? In future, we have to pay the money to him now. If supplier name is not mentioned, then the meaning is we purchased it for cash. So let us start the problem. First transaction is purchased goods from Prabhas. 2 points we have to observe. First one, what we are buying. Clearly he stated we are buying goods. Okay. Then supplier's name is given. Means this is credit purchases now. So when goods are purchased on credit, we should record in purchase book. Therefore, record this transaction. No need to start with TO2 or BY by, because this is not account. Okay? Directly that name you have to write. Don't write anything here. For invoice number, write down serial numbers, then amount. Next, purchased goods from Raghuveer. Same, we bought goods on credit. It comes. 7th date. Amount is 6,500. Then purchased goods from Madhumati. Goods are purchased on credit, so it comes. But what is the new point? Trade discount is given. Trade discount means what? When seller gives discount to customer, then that discount is known as trade discount. When trade discount is given, then write down the amount in inner column, 5,000 rupees, and deduct trade discount. Amount is not given, no, percentage is given. So calculate the trade discount in inner column. Then put the calculation in brackets, 4,500 in outer column. 3. Next, purchases. When nothing is mentioned here regarding the article, then what is the meaning of that? We purchased goods. Okay. But supplier name is not given. Means credit purchase or cash purchase? Cash purchase. It goes in cash book, no? Not here. Therefore, ignore this transaction. Next, purchased goods from Gopi Chand. Goods are purchased on credit. It comes here. 17th date. Next, purchased goods from Priyamani. Same. Goods are purchased on credit. It comes here. After entering all purchase transactions, find out the total. For this, write down total. Okay, so this is purchase book. Journalize the following transactions in the books of Dhoni. So Dhoni is a sole proprietor. in his firm he has some transactions for February month, so he wants to record them in journal book. Okay, so this is the format of journal: date, particulars, ledger folio number, debit, credit. Then first transaction is what? Commenced business with cash 40,000. Here commenced means what? Started. So what happened exactly? This is firm. All transactions you have to think from firm's point of view. So assume that you are an accountant of this firm. And who is the owner of this firm? Dhoni. So Dhoni started business. How? By bringing some money. Okay. Then in accounts we follow one concept, that is business entity concept. What that concept says? Owner is separate and firm is separate. So you have to maintain a discrimination between owner and firm when you are maintaining accounts in firm's book. So one outsider is giving some cash to us. You have to treat this transaction in that manner. So what is coming to us? Cash. Therefore, cash account is one account. Every transaction, every monetary business transaction contains minimum 2 accounts. So for writing journal entries, those 2 accounts first we have to identify. So what is the first account? Since cash is coming, cash account is one account. And who is giving that cash to us? Dhoni. Therefore, Dhoni account is another account. Then cash means asset, no? All assets come under real account. So cash account is a real account. Then Dhoni, person name. So it is a personal account. Then apply the double entry principles. Real account rule is debit what comes in, credit what goes out. So cash is coming to the firm or going from the firm? Coming to the firm. Therefore first line is applicable. Debit what comes in. Cash account we have to debit. Then personal account rule. Debit the receiver, credit the giver. Who is a person here? Dhoni. Meaning is, if Dhoni is a receiver, debit his account. If Dhoni is a giver, credit his account. So see here, Dhoni is giving money to us. He is a giver. Therefore, we should credit his account. And remember, when owner name comes in credit, instead of owner name, we have to write capital word. Okay. Then final entry will be cash account at R2 capital account. How to write that entry here? In date column, write down the transaction date. First debit account name you have to write. Which account is to be debited? Cash. Cash account. A by C is a symbol of account. Debtor. But you have to write DR. DR stands for debtor. Then credit account name, don't write here. In next line you have to write. While writing, leave at least 2 letters. Start from here. 2. To indicate that capital account is credited, we should write 2, not CR. 2. Which account is to be credited? Capital. Capital account. Now, cash account is debited now. So, in debit column, opposite to cash account, write down the amount for and capital is credited. So, in credit column, opposite to capital, write down the amount again. Now since you and me are commerce students, by seeing this entry we can understand what happened there. Owner brought capital, he started business. But a non-commerce student cannot understand this. So in brackets we have to write what happened there. What happened? Owner started business. So this bracket information is known as narration. Narration you can start with being. Being means what? Because. Being business is commenced. Okay, this is called narration. Now the whole thing is known as entry. Since we are writing this entry in journal book, this entry is known as journal entry. Okay, now second one, cash sales. Okay, firm sold goods to customers. If any fixed asset is sold, suppose furniture, building, land, clearly he gives that sold building for cash, sold furniture, like that. Since asset name is not mentioned, our assumption is goods are sold. So what are going from us? Goods. And it is cash sale, means what? Immediately customer paid cash to us. Goods are going, cash is coming. So identify the two accounts. Cash is coming, therefore cash account is one account. Goods are going, goods account is another account. Both are assets, so both come under real account. Real account rule is debit what comes in, credit what goes out. What is coming to us? Cash. Debit it. Going asset, credit it. When goods come in credit, instead of goods what to write? Sales, because this is sales transaction. Then the final entry is date 5th. Which account is to be debited? Cash. Amount is 6,000 rupees. Now, narration. What happened here? We sold goods for cash. Being goods are sold for cash. Okay. Then goods purchased from Rekha, 8,000 rupees. From whom we bought? From Rekha. So supplier's name is given in the question. Means what? It is a credit purchase. In credit purchases only we have to remember the supplier's name, because in future we have to pay money to her. Then what are coming to us? We bought goods, no? Goods are coming. Two accounts are goods account, Rekha account. Asset, so real account. Person, so personal account. Real account rule, debit what comes in, credit what goes out. Goods are coming now, debit. Personal account rule, debit the receiver, credit the giver. She is a giver, credit it. When goods come in debit, instead of goods what to write? This is purchase transaction, no. So write down purchases. Then the final entry is on 8th, purchases account debtor to Rekha account. Amount is 8,000 rupees. Narration. Being goods are purchased on credit. Okay. Then the last one is salaries paid 5,000 rupees. To whom we paid salary? To employee. Employee name is not given. Even though employee name he gives, you need not to consider that name. Okay. From the firm, what is going? Cash. Right? Then two accounts you have to pick up now. First account is expenditure name. What is the expenditure name here? Salary. So salary account is one account and cash is going from us. Therefore, cash account is another account. For example, he has given like this. Salaries paid to Raghu. Even though employee's name is given, don't take Raghu name here. Okay? Salary account, expenditure name is one account, and since cash is going, cash is another account. Now, expenses come under which account? Nominal account. Cash, asset, so real account. Now, nominal account rule, debit all expenses and losses, credit all incomes and gains. Salary is an expenditure, so we have to debit it. Real account rule, debit what comes in, credit what goes out. Cash is going, therefore credit it. Final entry is salary account debtor to cash account. 12th date. Narration. Being salary is paid. Record the opening entry from the following assets and liabilities as on 1st January 2015. So in question, he gives some assets and liabilities list. With this, we have to prepare journal proper. We have to write opening entry in that book. So journal proper format is just like journal format. Date, particulars, ledger, folio number, debit, credit. And when we have to write that entry on 1st January 2015, so in date column, write down the date. And while writing the entry, first all assets you have to debit one by one. So what are the assets? See, cash at bank is an asset, therefore debit it. Cash at bank, account debtor. Since we are debiting, amount we are to writing debit column. Amount is 13,000. Next, sundry debtors. Debtor is also an asset to us. because we have to receive money from them. Since it is an asset, we have to debit it. Sundry creditors, it is a liability, so don't write in debit side. Then buildings, building is an asset, debit it. Machinery is an asset, debit it. Bills payable is a liability. Now all assets we have taken, come to liabilities. Liability shows a credit balance, no? So you have to credit liabilities. Credit, how we have to start? Leave two letters, write down two, then write down the credit account names. First liability is what? Sundry creditors. Write down that. To sundry creditors account. Now amount is 40,000 rupees. Next, bills payable. This is also a liability. Bills payable account. 12,000 rupees. Find out the debit column total. Minus credit side total. Then the difference is 30,000 rupees. So in which column we have to write? In which column total is less? So credit column total is less, no? Write down this 30,000 rupees here. For this, in particulars column, write down to capital account. Okay. Now narration. What we did here, opening entry means what? Previous year closing balances of assets and liabilities we are bringing to current year. Being previous year assets and liabilities are brought forward to current year. Okay. Now close the table. This is journal proper. This is trial balance problem. It comes for 2 marks. See the question. From the following balances, prepare trial balance of Ravi Teja as on 31st March 2016. So from where they have taken all these balances? All these are ledger account balances. Okay. So all these accounts we prepare in ledger book, and in every account at the year end the balance carried on figures are given in the question. With this we have to prepare trial balance. This is the trial balance format. Particulars, debit, credit. With 3 columns we are preparing here. Sometimes we may prepare trial balance with 4 columns also. That is also correct. Trial balance, particulars, debit, particulars, credit. In this manner also we can prepare trial balance. Both formats are correct. Now, before preparing trial balance, we should know trial balance rules. In debit column, we have to write all assets, expenses, losses. And credit column contains opposite things: liabilities, income, gain, fund, provision, reserve. Okay? Now, all these accounts names one by one we have to write here in particulars column. Now, in which column we have to write the amount? That is only the main part of this problem. First one is what? Capital. Capital means what? The amount which is invested by the owner in the business. So according to business entity concept, firm is separate, owner is separate. So from owner, when we are taking money, we should assume that we are taking loan from the owner. So capital comes under liability. And liabilities where we should write in credit note. So capital amount we have to write in credit column. The next one, bills payable, means what? Somebody wrote a bills of exchange on us. We accepted it, we gave that bill to them. So in future, on that particular document, we have to pay money to them. Means we are liable to them. So bills payable is a liability. Liability where we should write in credit column. So bills payable in credit column, write down the amount. Then bills receivable means what? We gave loan to somebody. So we need a written proof. We prepared bills of exchange. We got acceptance from them. So on this document, in future, firm is going to get the money. So it is an asset to us. Asset where we should write in debit column. Therefore, bills receivable amount, write down in debit column. Purchases. Purchases come under expenditure. So all expenses we should write in debit column. So purchase amount in debit. Sales is an income. Income comes in credit column. Income amount in credit. 12,000 rupees. Then debtors. Debtor means who? A person who is liable to the firm. So we have to receive money from them. It is an asset to us. Asset we should write in debit column. So write down the amount in debit column. Okay. So we have entered everything. Now finally, debit and credit columns you have to total. So two column totals are same. Trial balance is tallied. Then your problem is correct. Okay. So all problems we have completed. Hope this video is useful to you. Thank you.